Good morning, traders. It's Tuesday, January 28th. Not a whole lot has changed in the markets. Really, it's going to be a volatile week. And yesterday, the markets closed down big. The equities markets today, we're going to see an oversold bounce to the upside. Nasdaq up 0.8%, SP 500 up 0.6%. If you look at the chart here, the daily chart, you can see we fell right down to this 20-day moving average, which has acted as a critical support zone. Markets oversold. And today we're getting, at this point, it's just a dead cat bounce. We're just getting a quick bounce. You can see our short-term cycles down here, our momentum, which is the blue, our short-term kind of swing trade is the yellow. Both of them bottomed out yesterday, and futures are showing that the bounce today is almost bringing the momentum back up to a cycle high at this point this morning. So we'll see how things shake out. The key point here that we want to look at is where this pink line, this pink cycle, is more or less when we start to break down from this upper range, which we almost did over here, and we are on the verge of breaking down here today. You can see when those happen, we get a move to the downside. We see the equities market have a correction, and we've seen that happen over and over again. Of course, these corrections are getting, if you notice, these cycle lows are getting they continue to climb. So we're getting squeezed and squeezed into a more or less longer term cycle to the upside, where eventually we're going to have a very violent correction. And this could be the start of it. More or less, we had another little pullback here, found support at the 20-day. We had another pullback here with news base, found support at the 20, pullback here. You could argue news base could be the coronavirus. Overall, it is pulling back. It's at the 20 days starting to bounce, and our cycles are short-term oversold. We're on the verge here of this intermediate cycle pulling back and giving us a deeper correction. So we'll see how things play out over the next little bit. We are long bonds. Bonds had a nice pop, and we've locked in some gains there. This morning, obviously, money moving into stocks, so the safe havens are fizzling out a little bit. Bonds are down slightly. They were actually up pretty good in overnight trading. They are slightly down, a 1/10% at this point. If we look over at gold, gold down 1/4%. Silver is actually taking it the hardest, down 1.7%. Back down to these lows. I'll just zoom in a little bit more. Back down to where we saw all these lows take place, and it's also the 20-day moving average. And silver, obviously, just more of a volatile player. Silver could, I mentioned this the other day, could unwind and sell off a lot more than gold. We could see something similar to this where it pulls back and we see silver really unwind while the rest of the market, maybe the metals and miners, potentially hold their value more than silver at this point. Let's take a look over at gold miners. Gold miners had a big pop to the upside and sold back down. Not a very bullish type of candle, but overall, price is still trying to hold up. And if you look at this upper zone here, this is where we've had a lot of bars open and close, where we've had highs, we've had a lot of volume through here at these panic highs, and more or less we're back up testing into this area. So whoever is unloading shares at this value here is doing so again. We pop back into that range, and that's where they want to unload shares, drive price down. We saw continuous selling yesterday. This could continue to have some downward pressure, and we'll see how things pan out. Ideally, it'd be nice if price will hold sideways in this range and build a launch pad for it to break to the upside. But as I mentioned yesterday, our cycle analysis shows there is potential that could have been a reversal, and we see price come down and break this low right across here, which would cleanse the market. It would create some type of panic washout, and then from there we could start to see it move higher going forward. Taking a look over at energies, natural gas up 1% this morning. We're seeing some volume, some half decent volume step in. We've been seeing this quite often in the pre-market. If I just scroll up a little bit, you can see, you can't see the volume on this chart, but actually I think I can drag and drop it up here. More or less, we keep seeing in the mornings, well, it's hard to see all that. Anyway, I'll just clean it up. More or less in the mornings, we keep seeing these strong rallies here. We had another strong push. When more or less the futures open, we start to see a nice morning push in price. And we got a nice pop again today. There is accumulation trying to take place with natural gas, but again, it's getting driven down by some selling. Obviously, poor fundamentals, but usually when the fundamentals come out and everything is really poor and price is already sold off, it usually means we're right near a bottom. And so we need to see if natural gas is going to find stability here and try and break out. You can see we've been trading down below this green line here, which means the cycles are uh, down in the power zone, meaning it's going to continue to be in a downtrend. We were starting to see the price hook up. We need to really start to see price pop and move, and for this orange cycle or pink cycle to start moving up, which would give us one of these explosive type of moves to the upside, which is what we traded back over at these times over here when we got in. So it's do or die for natural gas. Either it's going to drop down substantially and we're going to get stopped out, or it's going to pop and build a base and start to take off to the upside. So it feels like this week could be a really pivotal week, either stopped out or we start to see it pick up speed to the upside, and we see a lot of short covering kick into high gear and a strong explosive rally there. Crude oil up 0.4%. Again, came all the way down. We had this 53 and 52, or actually 53 down to more or less 51, which is this low and this low over here. Downside target overall is oversold. It is in a downtrend, and we'll see how things consolidate here. Could form some type of bearish formation and start to break down. If it does, we may look to get on an inverse, because the breakdown from this pattern is really substantial. It would go from more or less 50, 51, the breakdown area, all the way down to potentially 42, 43. So you're looking at an $8-9 potential drop, which is pretty significant from this range, and it would really extend. It would be something similar to this, where price comes down, finds support for only a couple sessions, and then just breaks and collapses to the next one. And of course, this was pretty over exaggerated, but it can continue like that and really flush all the way back down for a potential major double bottom around this 42, or potentially even lower. Going back in time, we've got that 30, 26, 27 low potentially. This pattern here, if we were to take the high with the Fibonacci extension, high down to the low, up to this high, carry it forward, we've got this 32 potential where it will come all the way back down. 618 would be the first level. So right through this big spike low, could find a hiccup and a bounce. If it does hiccup and bounce there, usually you see the 100% measured move hit. So there's a lot of potential, potentially almost a $20 move to the downside in crude if this big pattern was to really play out. We need to break this low here at 51. If that's broken, then we're going to work our way much lower. Anyways, that's it for this morning, and I'll talk to you in a little bit. Bye-bye.